All right, so standard backtesting slash Q&A session that we normally run on the weekends. We'll try and keep it quick today because I don't want to take up too much more of your time. So if you got any questions related to ICT, related to the previous week, psychology, creating a model, all those things, those are all valid. So you can put them up in the stage chat. Otherwise, we're going to go through probably just one setup from this week, looking at things like the time of day and the profiles and setups, things like that, or the entries, I mean. And then once we get that done, someone was requesting a FX replay session, so we'll go through an FX replay, like one or two different like live tape reading kind of examples. So just looking at old data, not having a bias, and just kind of going in through what I would look for, and then how I would enter and where I would put my stop and take profit, things like that. So we'll do a couple examples of those, and then we'll just wrap it up. And this will all be recorded and posted and put on YouTube unlisted, meaning you have to have a link to access it. And the link will be posted into the YouTube vids section of the Discord. So if you go and look at the channels, all the tape reading streams are normally in there, the market review streams, most of which are not posted publicly, but you can find them in that chat. So feel free to post any questions, obviously, as I'm going. If there's anything that pops into mind, we'll go through that. But as of right now, I just wanted to look at, I think it was, remove some of this. I believe it was Thursday's price action. Thursday, I think, arguably was the best one. So we'll look at Thursday. So obviously this week we had elections, and we had a lot of news drivers, FOMC given on later in the day as well. So Tuesday and Thursday, I guess Monday and Thursday were really the only two highest quality ones. Tuesday wasn't bad either, but we'll look specifically at Thursday. So going back into the old data here. Yeah, I'm speaking. You may have to leave and rejoin. Let me actually. Anyway, so going back to the daily chart over here, where obviously we're attacking all-time highs. We'd already traded through this larger inefficiency. So that to me indicated if you're failing to offer fair value, we're going to reach for buy-side liquidity pools. We have this short-term swing high here on the daily, and then we also have the all-time highs up here, which is also marked as buy-side. So both of those are reasonable annotations on the daily chart, and obviously our closure on Wednesday was substantially above the Tuesday high, also above here. So it's not like we came up and just wicked this, and we're likely to see a reversal now. We had a strong closure on Wednesday. We're reaching for buy-side liquidity pools. There's no indication, at least on the daily chart, that we would like to move back lower. Right, going to the 4-hour, we can look at things like weekly profiles and expectations for the week. So if I mark out the Monday open, or Sunday right here, and then to Friday close would be all the way over here. So looking at the 4-hour chart, we've got that kind of open, the slight manipulation. You could also probably assume that there's SMT here between the weekly low, and then we're obviously expanding up past the previous week high. And even on the 4-hour chart, there's no indication that we would like to reverse. All very just healthy up candles, partially from the election, partially just we're just expanding a great deal on this week. So further emphasizing we have a bullish bias. So obviously you could drop down to the 1-hour, look for the same exact thing. What's the narrative here? But the bias for the most part here would be going into the hourly chart would be an open, low, high, close. Very, very simple bias. We're looking for that standard power of 3. And this is applicable to the daily candle and to the session candle. So we look at this. Now we can kind of refine down, okay, what are we looking for between the open at midnight and then the end of what I'm looking for is the end of the London close session at noon. So really the whole day I'm looking for is between midnight and noon. Could obviously extend that into PM session, but that's mostly what I'm looking for. So the open, low, high, close. Now we can zoom in. And I was recently on a one-on-one call with someone, and the gentleman asked how you look for meaningful manipulation. So meaningful manipulation has to occur on the, at least for me, greater than or equal to the 1-hour chart. So there's got to be some sort of PD array that's on or above the 1 hour chart, and that London needs to be manipulating into that range and then displacing out of it. So in this case, we have London is between 2 and 5. In this case, we have an inefficiency here on the hourly chart. And we also have this bullish order block that's supporting price. So if you mark both these out, and it doesn't have to be anything specific, but what I would make it easier for people to look for is fair value gap, liquidity, so ERL, IRL, order block, or I guess you could also look for a breaker. But that's really the PDRs I'm looking for. It doesn't need to be in a large discount, but it should be in some sort of a discount dealing range. So in here, if I take it from this low to this high, that's just a short-term dealing range. You can see we do drop in a discount there. So technically that would be a discount of the dealing range. So yeah, preferably it's got to be a discount PD array. But if you look at London, we're opening up. We're still looking for that open low high close. We drop into the bullish order block, into the inefficiency, and we're holding it. We're respecting that there, right? So now we can look at the news profile. I believe we had 8:30 news on Thursday. And now we're going to expect, okay, if London did this, then New York is likely to do that. Well, in this case, London did do something. We had meaningful manipulation into an hourly or above PD array. So now I can assume that a bunch of different things. So, okay, London manipulated equals potential low of day. We're looking for a New York open expansion into London close. We're looking for time of day or timed base session, I guess. Time-based session, meaning we should see 8:30, 9:30, or 10. Create the low of the session, the New York session. And then we're looking for entries in line with the bias before time of day is hit, before London close. So now you can basically make all these assumptions from the bias. And what you want to be training yourself to do is be comfortable with making these sort of assumptions, because it's very simple once you understand, okay, if London did not manipulate, if it's not classic, it's got to be New York reversal. That's it. And if it's not New York reversal, if it's not clear there, then it's a day you just simply avoid. And it's very simple when you put it like that, because now if London did this, yes, okay, New York expanding. If London didn't manipulate, okay, New York is going to reverse. And if it's not clear, then we just don't touch it. And you can trust that touching is not going to be a big deal, because there's always going to be at least one setup per week. There's typically around 2 to 3, if I'm being honest, but at least one time per week you'll see a New York reversal or a classic expansion. So if on Monday we don't see it, if on Tuesday it's difficult to read, we skip it. If then on Wednesday, okay, we see a clear manipulation, then you may be engaged on Wednesday. But just trusting that these things repeat and that there's at least one per week, and you only need one per week to make your ends met and obviously beyond, then it's very easy to, or not very easy, but it's easier to execute. Okay, so now we go into the 15-minute chart. This is where we're looking for the profiles and what basically London did and continuing into New York. So we had 8:30 news on this day. It's good to annotate that, because that's going to be an injection of volatility, and that's going to serve as either expansion or manipulation. So in this case, we see the clear London. Actually, I can turn on the ranges here. It's a bit easier to see. So we can see London drops into it. We start to see an expansion away. So this is the market structure shift I'm looking for. Displacement past that swing high. So we got displacement there. It doesn't need to come back and fill this necessarily. Just I'm looking for that meaningful manipulation out of it. And then at 8:30, we had this drop down, and we had SMT here. So SMT is going to be crucial for reversal points and for retracements, because retracements on a lower time frame is a reversal. And in order for price to reverse properly, we need to have a SMT. So I also know that there's SMT, I believe, on the London low. Can zoom back into Thursday. Yeah, we have a slight SMT here. I don't know why it's zooming out like this. It's kind of annoying. Like between. Nope. Trying to spot exactly where it is. Oh, right here. There you go. So SMT here during London. Very slight, but still SMT. So that's one SMT. Then you should have New York SMT as well, which we already seen. with the 830 low. So 830 is manipulating, and we have SMT. So what am I trusting about that? That's most likely going to be the reversal point, meaning that's most likely going to be the low of session. Okay, so if I trust that that's going to be low of session, I'm likely now to see expansion at 9:30. I'm likely to see expansion at 10 o'clock, and we're now going to reach for a premium array at a time of day that I want to see it met by. So now, with the assumption that 8:30 is the low of the day, now we can look for 9:30 expansion, maybe 10 a.m. expansion. I'm looking for an hourly or 15-minute PD array, preferably a premium array, to be hit, and it's got to be post 10 a.m. So now that's a further set of assumptions that you can make, and now entry becomes easy. And I'm trying to make it obvious in the videos that I've been posting recently that entries don't really matter too much. Like if you have a clear draw on liquidity and a draw on time, you can enter anywhere between the time of day we form the low and the time of day we form the high, as long as your stop is in the right position, that trade will work. So entries, I'm not too worried about it. I just know, okay, I'm looking for fair value gap or an order block or a breaker, whatever it may be, some sort of PD array and discount that I can trade towards. So now with this set of assumptions, we're just dropping into a lower time frame and we're looking for that same exact kind of stuff. So we already saw the SMT at 8:30. We don't need to see the SMT at 9 or 9:30. And if we mark out right at 9:30, what do we see? So it's good to have flexibility, meaning just because you can make these assumptions doesn't mean that it's a guarantee. So never operate on guarantees because the market it's not guaranteed to do anything. It's good to look at it like that. So I trust that 9:30 isn't likely to manipulate, but for the off chance that it does, even if it manipulates down, if we form an inversion gap or something lower, then I'm going to trust that that's a high quality setup and we're going to continue up. So trusting the bias and trusting your analysis, but being flexible that's the hard part, but that's kind of where experience comes in. So 9:30, as soon as we start to shoot up, we take out another swing high there. Now all of the PD arrays before 10 a.m. I'm looking to engage with. So if you mark out 10 a.m. here, 10 to 12 becomes the entire kill zone, or the London close kill zone. So you can mark out all these PD arrays. Right? We have an inversion gap here that we trade back into. We have a bullish order block here we trade into. We have, buy this over here. There we go. We have this bullish order block. We have this inefficiency, which I think is the first presentation gap. We have probably a 5-minute gap in here somewhere. Right? I can zoom back out and I can look for that quickly. Yeah, 5-minute inefficiency here. Another 5-minute inefficiency over here. And you can see that every single time we're referring back to these PD arrays, it's just another entry point that you could be using. There's obviously like a bunch of different things. Order block here, and any of these could be your entry model. So if you prefer to use fair value gaps, then use fair value gaps. That's going to be the easiest one in my opinion. Then you could use order blocks, then you could use different things like breakers or mitigation blocks, things like that. It's not necessary. And now you can see that all these PD arrays, until we hit 10 a.m. and until we hit our price point, they're paired together. Then we can trust that as an entry. So an entry here, 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 all these. I want you to notice as well at what time that this high is put in, 10:13. So on a session basis, is that the right time for us to form the high? No. And you can see at 10:45, eventually we do run this out. And I explicitly said that that's exactly what we're going to do going into 10:30. We're likely to form that new high. If you can go back and watch the stream recording as well, or if you're in the private group, you can look at the predictions chat, and this is exactly what we were annotating going into Thursday. And then we do eventually start to climb and reach for that other buy side up here, and going to the PM session, I believe that's what we hit. And just a little tip here is that lunch actually is what you could be using as the London of PM. So look for manipulation during lunch, and then if you're trading PM session, that's basically the function. So if lunch did this, PM session should do this, or if AM session did this, PM session could do this, right? And then eventually we do tag all-time highs right there. So we just slightly tag it, and you can see, obviously if you're holding that far, it's not necessary, but if say you traded the first presentation gap with the order block, it's a good 186. or even up for that short-term swing high that's broken, it's about 100 points. Not necessary that you capture all of that. You could be capturing just 20 of that range, and that's perfectly fine. But obviously training yourself to look for these certain things of both time and price. So they're paired together. So just because it hits the right time of day does not mean that we're going to instantly reverse. Notice here how it hits 10 a.m., we form a new high. That could be a partial point, but that does not mean that it's going to outright reverse right at 10 because it's 10 o'clock. Or just because it hits this new high at 10:45, that's between 10:30 and 11, that we're going to reverse because it's a new session high. Those are partial opportunities, but remember, it's time and price. So it needs to be, first of all, the time of day, but then we're going to continue to expand until a price point is met. And that price point is either going to be a 15-minute or 60-minute PD array if we're looking at the New York session. So that's what you have to focus on. Don't get too caught up in the price aspect of it. And then don't get too caught up in the time aspect of it. If not everything is going to be super precise, if it's time is more precise than price, time is more precise than price. But it's not everything. You need both in tandem for it to be high quality. If 8:30 wasn't news, how did it manipulate? It's like you look for S&P between 8:30 and 8:50. I would look for, so if there was no 8:30 news on this day, then I trust that if 8:30 didn't do anything specifically, then I'm gonna be looking for 9:30, that injection of volatility to manipulate. Because think about it, if 9:30 has an injection of volatility and we start to displace towards the sell side, people are gonna trust that as the true move, and that's the Judas swing. So you're going to pair more liquidity at the start of the session and then eventually distribute it to whatever the target was for the day. So it's those key times, 8:30, 9:30, 10, that you want to see specific manipulation at. So if you're saying the whole framework can be applied to the PM session in a similar way, just using lunch as London, I could be saying that, yeah. Like that's roughly what I'm trying to get at, is that, yeah, lunch does have some sort of function in that it could be manipulation, right? And then for PM session, you kind of have a similar move. But I would say if you're going to study it, go back in and watch the core content month 10, I believe, where ICT talks about the PM session trades, like the models and like the daily schematics as to what lunch did and what New York did, and then what the PM session will do as a result. Now, I don't like trading the PM session because a lot of times it's going to be a little bit more choppier and it's not going to be the best moves. Because if we already completed the daily range, then all of PM session will just chop around, and maybe the only opportunity you have is macro on close between 15:15 and 15:45. So I would say if you have the opportunity, always just trade the New York session. That's going to be the easiest one for most people. But yeah, if you wanted to study it and maybe potentially find reasons why you maybe wanted to hold into PM or why you wanted to continue trading into PM, then that would be a reason. But realistically, one session is all you need. One session per week is all you need. Eventually, you want to get down to one trade per month. And if you can get to that point, then, obviously you're doing extremely well. What if we get the smart money reversal in Asia and manipulation? To be honest, I'm not concerned with Asia. That's just my own personal preference. If Asia does something specific, I'll glance over it. But to me, even if Asia manipulates, we still have to see the same exact thing in London then. So Asia may be creating the low of the day, but then I'll still see something in London that indicates New York is likely to expand or New York is likely to reverse. So I'm not including Asia session into my own session schematics because, to be honest, if I have a clear draw on liquidity, that's the first step, right? Is finding a draw and finding a bias. Then looking at things like London manipulation into PD arrays, that should still, it's fractal. So Asian, London, New York should all have the same exact kind of dynamics in it that'll point to your bias is correct, or it's going to be this open low high close, or 9:30 may create the low of the session. So I don't use Asian, and that's going to be, for everyone, it's going to be very specific things that you don't like and that you like. I don't use things like the opening range gap. I don't use things like the new week opening gap. I don't like things like the new day opening gap, or I don't like specifically using DXY as inverse correlation. That's not really much things that you have to find exactly what you like to use, right? I don't like using total soup entries yet. I'm trying to get to that point, but figure out what resonates with you and what you can spot and what your brain picks up on patterns the easiest. And then once you see it enough in hindsight, like you're going back and you're back testing it, then it's the same thing, right? So you want to be in your back testing and in the times you're going back into screenshots, find the things that's easiest for your brain to spot and make sense. And then you can go back in and you can find exactly what, why you're actually doing it live is, okay, here's the pattern. Here's the things I like to see. It's this, this, and this. And then you can go in and like, okay, I can spot that really easily. Boom, I can get in and it's no worry for me. And obviously you're going to have one or two or maybe even three high quality setups. And most times the highest quality ones are going to be between Tuesday and Thursday, right? Then maybe Friday, then maybe Monday. So like an order of, if we had no economic news on all the days, this is the order I'm looking for. Tuesday, Thursday, the best, because obviously we're going to be expanding on that weekly candle. Then Friday, and then Monday is normally going to be the worst day, typically, as it's 9 times out of 10 served as the weekly accumulation of that range. All right. How does New York midnight open play into it? Do we want to see manipulation of below or below midnight, or does it matter? I use midnight as like that opening price. So yeah, preferably if we're bullish, then we need to see London or New York manipulate below midnight opening price. It's not like a be all end all. So like if, for example, if London fails to manipulate midnight, but it's still, it's still in line with the bias, to me that just makes it even stronger. If we can't even get below midnight opening price, that just shows me that it's like basically on the daily candle, what we're going to see is something like this, where it's just a very, very strong, healthy candle with maybe just the tiniest wick here, and that's it. And then maybe we have a larger wick on top. So that's what I'd be looking for if, we don't have that kind of manipulation, right? Other times you'll see it, okay, we'll have that larger wick down here, and that would be a classic, we're dropping below the opening price there, and then we have clear manipulation, and then we're expanding into a new time of day. Make sense? So yeah, I'm looking at midnight, but it's not an end all be all. Even an unfilled new day opening gap or new week opening gap, yep, I could care less, to be honest. It's not a PD rate that I'm marking up, or I'm not studying a whole lot. I'll have the new week opening gap on my chart. You can see there's actually an indicator here. I'll look at it every now and then because it has some function as the weekly open, but I'm not ever using it as a draw on liquidity. I'm not ever using it as a method to find a bias or as a reason why we're going to stop expanding. Obviously, that means I'm going to miss certain things, but it's just not important to me, to be completely honest. It's not something that I'm using in my analysis. And you're going to find that the same exact thing happens to you. Maybe you don't like profiling, or you don't like order blocks as entry points, and you see other people using it. Just because you see someone else using it, if it doesn't resonate with you, it's not the biggest deal at all. So the goal is to have a bunch of tools that you can use, and then only need a specific set of tools on any given day. So get the knowledge, but then at a certain point, you're not going to be carrying 16 bags of tools. Like, just find the ones that work and the ones that are easy and make sense. It doesn't have to be hard or difficult. You don't need to have any crazy analysis. The things that work, just make it as easy as you can. And if you can find 1 or 2 setups per week, you're doing great. What's the London silver bullet after daylight saving time shift? It's the same thing, 3 to 4. Daylight savings does not do anything. I've gotten that question a lot. Don't worry about it. As long as you're using New York open time, it's the same thing. So everyone should be using UTC -5 at this point, but always just check your chart is on New York. Daylight savings, not daylight savings, doesn't matter. All the time functions are all the same. They don't shift. So you don't have to worry about it. Okay. Awesome, man. I appreciate that. Could you explain the difference between swing to Z day and protraction profile? So swing to Z day is going to be basically exactly what you got on Friday. A very just difficult day. The difference between them is swing to Z is going to be consolidation. Protraction profile on, like, if you're talking about London protraction, then you're going to have New York expanding. So in this case, if you look at the difference between the two, a classic, I'll give the bullish example for both of these. A classic London protraction, you'll have something like this, where this is London low and this is New York open. This is London close. A swing to Z day will look something like this sometimes, where you have London creating the low, and then we displace into maybe 7 or 10, and then we just come back into the range and consolidate. So this is exactly why you cannot use profiles to find a bias. You can't go into the chart and just look at the 15-minute chart and be like, oh, it looks like this. You're patterning it. You can't pattern price. Okay, because just because it looks like something doesn't mean anything. That's what retail people do. So you have to have a bias and a narrative as to what it's likely to do first. Then you go into the session and you look at, okay, what is it doing? The entire week we were expanding. Friday does not have to do anything meaningful. We had no news. So is Friday likely to expand? No. We're already capping off the range. So it's most likely that Friday is going to be range bound. We're going to exactly trade into TGIF and be stuck in that range. So if you were looking at this regularly, then it'd be the classic, protraction maybe. But given the fact that it's a bias, given the fact that we have economic calendar, all those tools to our disposal, then we know it's likely to be swing to Z. And I'll go further into how to identify it and how to trade the different profiles in the next kind of time video. I've got a bunch of things that's on the list, about like 10 or 20 points I want to hit. So that'll be in there. And then I'll also kind of elaborate on what PD arrays you want to be using for the specific profiles. Like, so what's going to give you the best kind of entries, what's going to be the easiest entries, and then how to manage a stop loss and take profit and things like that. Yeah, Friday was terrible. But your goal on these kind of days is not to learn how to trade them, but rather how to avoid them. Okay. So obviously you can go back into the 1 minute and you can scrutinize the charts and be like, oh, there was this short that would have net me 20 points, or there was this long that would have net me 40 points if only I had taken my profit on this random swing low. Like, you could go into the chart and be like, oh, there's this gap here and I could have taken profit right there. And that would have been an easy 37 points. But in reality, are you going to be able to see that in clear forward sight, like actually doing it? No, most likely not. So this is like a poor version of hindsight. Like, you don't want to be doing this where you're beating yourself up over these missed moves. And obviously with hindsight, you could be using any of this, and it's not what you want to be doing. There's an entry here. Oh, you could have used that. But that's not the kind of hindsight you want. The hindsight you want is, okay, this kind of day is obviously nasty. So how can we avoid this? How can we take a trade that, or avoid taking a trade on these kind of days where I can save my mental capital? So going back into looking, okay, what's the higher time frame saying? What's the narrative? And how can I avoid this? That's the easiest thing, because in reality, if you can take one trade and hit 2R on the week, and then there's someone else who takes a 2R trade, and then a negative 1R, and then a 3R, and then a negative 2R. What is that? Maybe 1, 4, 2. So they took total of 4 trades and netted 2R. Who do you think is more, has less stress? Who do you think is more comfortable in their life? Who do you think just doesn't care as much about the outcome of the trade? Obviously this person. This person took one trade and made the same thing as this person. But the difference between this is that this person understands how to avoid low probability trades. And this person does not know how to avoid those. So they're burning so much mental capital, and they're burning even physical capital sometimes, of allowing this variance in. And think about this. If you're adding all these kind of trades in, how many more times are you allowing or bringing in the opportunity for breaking of rules to happen? Right? If this person only takes one trade and then maybe they just don't look at it the rest of the week, they're not even inviting that kind of variance in. This person, on each of these days, they may be trading more P&L because they want to be green on the week, or they may be trading, oh, I just lost last trade, I need to double it this trade. And they're focused more on the outcome than the process of it. So that's why I always state, if you can find 1 or 2 high quality trade setups per week, you're doing fantastic. You don't need to trade every day. You don't need to trade every session. You don't need to be trading more than 1 trade per day. So finding and studying which days have the best ones, what's the best kind of, take profit, what time of day does it expand into? That's going to be the most important. How do you know when to trade and when not to? That's going to be based on whatever your model is. So for me, I'm looking at things like the economic calendar. I'm looking at things like the weekly profile, daily bias, have targets been met, London session profiles. There's a bunch of different things. Like, did the previous day expand? That comes with experience, but it also comes with, I've seen it enough, which I guess that is experience, right? So it comes down to there's going to be some things like days before 8:30 news. Typically, it's not going to be optimal. Mondays are not going to be optimal. So having clean cut rules like that are there to protect you rather than limit you, that's going to be important. So rules are not there to limit you, and you should never look at that. Rules are there because you've seen certain things that produce losing trades or produce difficult scenarios. So your rules are there to protect you from taking any stupid trades or taking a loss. Right? So they're not there to limit you. They're there to actually grow you as a trader. And that's how you have to view them. Same thing with problems or losing. It's just another step to profitability. Exactly. More is less and less is more. What's my favorite entry model? It's gonna, for me, it's I don't really use entry models. So, but I'm gonna be use either. I prefer the macro, so the 950 macro or slightly before the 950 macro. So that's the time entry that I use. But the sort of actual entries, like in terms of like getting in, I prefer a fair value gap in. It's gonna sound so lame, but it's literally just a fair value gap in discount with an order block or a unicorn setup or a breaker and a fair value gap. But that's all you need. Like it's not a fancy, crazy entry model. Doesn't even matter. And what I'm trying to show you in this is you don't need an entry model that much. Like it's good to have one, but that's the least of your concern. So don't go on YouTube and be like, oh, here's the best entry model that you're missing. You're not missing anything. Figure out draw, and you could get in between X time and Y time. And as long as your draw liquidity is correct, it's going to keep going. Right? I personally think that these are the only two you'll ever need because on a retracement leg, this is how it works. On a reversal leg, this is how it works. So if I'm getting in on either retracement or reversal leg, I'm going to have a pretty good stop placement. I'm going to have a pretty good take profit. It's just going to net me better. So that's really the only two that I would say anyone needs is just find that dealing range, find an efficiency and short-term discount or premium, use that. Or if there's a breaker present, use that because we don't need to drop into discount in this case, right? So that would be the two kind of entries I would use for most of the trading. There's going to be slight times where I use something different, but for the most part, that's what I'm favoring. Do you use normal kill zones while reading futures, or you use micros? Have you used both? How do they compare? I use normal kill zones. I don't know what micro kill zones are. If you're talking about QT or something like that, I don't use QT. I think personally, I think QT is the most BS thing you could look at. But that's just my own opinion. It's just extra time. You don't need that. You don't need 90-minute cycles. You don't need QT. You don't need CRT. It's just a rebrand of time. And it's for people who think that there's some sort of magic to it. I mean, there definitely is, but it's not QT in my opinion. So I use normal kill zones. I use London Open, New York Open, London Close, and then obviously all the regular ones like this, Asian, London PM, all that stuff. Okay. How do you determine weekly draw? Same thing. 4-hour chart is going to be important. Time frame do I enter in? Typically, it's going to be the 1 minute. I would really suggest for most people don't ever go below the 1 minute chart. It's just not needed. And for the most people who are new, the 3 minute is going to be the go-to. The 3 minute or the 5 minute. Don't use the 1 minute. It's going to be hard to learn in the beginning. I made the mistake early on in my ICT career of studying the 1 minute. It was difficult in the beginning, but I'm obviously glad that I did it. But realistically, yeah, the 3 minute and the 5 minute is going to remove a lot of that quote unquote noise. It's not noise, but there's some stuff you just kind of blow off. So that's what I would say. Yeah, don't drop below the 1 minute. It's not necessary. At least you could do it later on, and when you have like 5 years experience, but in all reality, you should be zooming out more than you should be zooming in. Do you have a YouTube video on the micros or futures trading in general? I tend to start trading in Q and EU only. I also tend to do more of currency futures. I do. If you look up on YouTube, switching from forex to futures, that video should pop up, and it'll go in depth about utilizing futures and how they work. It will be uploaded to YouTube unlisted, so you can watch it later. Yep. IFPGs are really good as well. Yeah. IFPGs are good if you understand DOL. You have to understand DOL in time. So like things like 930 IFPG, that's probably one of the best ones you could use, but it needs to be paired with the draw. There's obviously like there's no holy grail entry type. All right, so we'll get into the FX replay. I wanted to do a couple of those, like 2 or 3, and then we'll just wrap it up. I don't want to take too much more of your time. So let me pull up FX replay. Can you do IFPG on FX replay? Yeah, we can do an IFPG entry. That's fine. So let me stop streaming here, and then let me stream FX replay. Tell me if you can see it. We'll go into like spring of this year. Well, yeah, we'll just go into spring and basically see, okay, there's any, we'll look at just a couple of the different entry techniques and how that plays into the time and things like that. Yeah, this will be recorded as well. Let me actually switch over to this. I have to fix my OBS. Give me a sec. All right, so let me make a new one really quick. What's the date today? So I'll go into spring of this year. How do I, oh. Well, April was pretty good. We'll go to May. So just do a couple of these and then we'll wrap it up. So IFPG entry, since someone said IFPG, we'll do IFPG. And then we'll do, I don't know what kind of entry type as well. We'll do a standard entry as well, like an order block, something like that. Anyways, so we'll do a couple top down. Expand chart. This is Monday, so let me skip forward to Tuesday. So I'll go to midnight. Let me actually full screen this. So skipping on Tuesday, I mean, actually, if you can see in here, this is probably already beneficial, but anyways, go to Tuesday. So there's midnight on Tuesday. So we can go to the daily chart. So what's the daily bias? How are we closing on the daily chart? Things like that. Well, we're obviously in a clear uptrend. We've already taken out this bias of liquidity here. Shout out, by the way, to Cardinal. I appreciate you for letting me use this software. We've been holding the bullish PD arrays. We've got this daily inefficiency here. We've been holding. Notice the closure relative to this, right? We're just wicking it. As well as on Monday, we're closing above that swing high here. Actually, it's not closing above, but closure past the previous day swing high. So we're now targeting, just on the daily chart, this swing high. Given the PD arrays, we can go to the 4-hour chart and look at that as well. So in here, we have same exact thing. We're dropped into this inefficiency here. We're holding it. We have a clear displacement past the swing high. So for the clears, by the way, to find bias, like the easiest thing you can do if you're struggling, just utilize the 2022. Where are we in the 2022 model? That's it. And we're either going to be manipulating into an inefficiency or manipulating into an external range. And just finding the bias using that normally is pretty clear. So in this case, you can see the 2022 in here. We're dropping into an inefficiency in this case. We're displacing past this short-term swing high, and we're filling an inefficiency. Where is it likely to go to next? Previous day high. I think that's pretty simple, right? So that's like an easiest way you could find bias. You could obviously utilize things in here like weekly profiles, but it is already a Tuesday, so I don't think, we can use too much of a weekly profile in mind in this case. We go down to the hourly chart, and now we're looking for the standard dynamics in here. I don't know why this is so large. Can I move this down? All right. So we're looking for now this open, low, high close, right? And we're looking at what did London do? So what are some potential points on the 1 hour chart, since we're looking at the 1 hour, that London could manipulate into? Well, I'm looking at this inefficiency here is a pretty clear IRL, right? I'm looking at, is there anything in here? There's not really an order block that we could be manipulating into. I guess this one down here, if you want to get all the way into it, this would be a bullish order block. And then you could be doing things like fib projecting. I don't think it's necessary. If you wanted to, you could, but I guess we do have a level up there we could be targeting. But that's basically what I'm looking for going into London. So we can skip this forward until, let's go till 8 a.m. Skip this forward. Did London do anything? We failed to take out that short-term low. That would have been another PD, right? It's not in discount. I want to actually mark out this dealing range here. Okay. Skip forward, skip forward. So now we're tagging this at 5 a.m. Do we have displacement out of it? We have a short-term high there. Let's see if it actually displaces past the swing high. Okay, well, we don't actually get anything meaningful in here. So we're looking for an open low high close. We didn't get any meaningful manipulation, or we did actually get meaningful manipulation at London session. Did it drop into discount? No. Was there meaningful expansion out of it? There was. But did we hold this inefficiency? No. So, okay, if London did do some of it, but it didn't do all of it, then what does New York have to do? This is not a classic London protraction. London is not making the low of the day. So I'm expecting that New York is going to make the low of the day. I don't know if there's news profiles on here. I don't think there is news profiles you can see. So assume that there's no news on this day. Our times that we're looking for, if it's, we can assume now it is a New York open reversal. We're going to be targeting London close, so post 10 a.m. Our low-hanging fruit is going to be our London high and previous day high. We're going to be utilizing either 9:30 or 10 a.m. as the low of day and low of session. And we're going to be, someone said IFVG entries, so we'll be using an IFVG entry with stop. I will just say IFV entry for this example. Okay, so that's what we can assume from this kind of data, right? So we can mark out 9:30 here. I'm going to mark out some of these just to make it visually appealing. We'll mark out 10 o'clock, and then we'll mark out 12. Okay, so in terms of the sessions, we're looking at 2 to 5 in here as 1. Didn't do anything meaningful. Here's also 5:30, so notice that's outside of the kill zone we want to be looking for. Then we have 7 to 10 as another one, and then we have 10 to 12 as another one. Okay, so we have this as buy side as well. I didn't mark this out clearly. Like this is blue. So that's what we can be assuming. Okay, so now we're just dropping into a lower time frame. We could use the 5 minute or the 1 minute. And we're looking at either 9:30 or 10 o'clock to create the low of the day. And we do have, we're now in discount. We're about to be in discount. Let me switch this back to the 1 minute. There's your drop into discount. So now I can go to the 1 minute chart and look at, okay, is there any sort of entry now, preferably after 9:30, that would be likely that we're going to reach for the buy side. Now, I didn't mark out London high. This would be London high. That's our low-hanging fruit that I mentioned. Mark that as blue. And then obviously the previous day high as well that we could be reaching for. Is there any low-hanging fruit also that we could be targeting? Yeah, we have these relative equal highs here. That would be necessary for us to, not necessary, but something we could be looking for. So anyways, going into it, Now we're just looking for what did 930 do? Does 930 create the low of the session, for example? So in here, we're expecting either 930 or 10. We're dropping all the way into discount below that hourly gap. Here comes 930. We drop down. Now, when I say 930, I'm not talking about the 1 minute candle. I'm talking about the 15-minute candle. So the 15-minute is the bellwether chart, right? And if we see the 15-minute creates that low, that's what I'm looking at. So really, it's going to be between 930 and 945, but sometimes it is exactly at 930. So that's what I'm looking for. So 930 low of session. So we're looking for as well as an inversion fair value gap for us to trade into. So in here, we start to get an expansion. We have no bisi in here. There's no inversion gap at this point. We do have a gap over here. It is slightly in premium. I want to wait for another inversion gap. But you could obviously be using that as an entry point and then putting the stop below there. Okay, here's a sibi. So let's see if we can flip this as inversion. So now I hope this makes sense. So we're basically looking at, okay, New York is likely to make the low of the day. We're expanding into London close. We're going to target the buy side liquidity up here, the London session high. And we're using time of day as entry point and an inversion gap as an entry point, all for that to eventually reach up into here. And you can see where the stop placement as well. So we're looking now for basically price to close above this gap here. Let me actually move this to forward. Give me a sec. There we go. And then we'll enter in here. I'll place my stop at the short-term swing low. And then the take profit will be up at the London high. So skip forward, see if we can get that. So there we close above it. Now I would like as well for a short-term SysD, but since we wanted to use inversion gap, we'll go 2 contracts here. We'll place take profit and stop loss. Stop loss, we can go, we'll keep it conservative and put it below there. And then take profit up at the London session high because that's the low-hanging fruit. Obviously, you can put it up at this buy side too, but for now, we'll just keep it like that. Makes sense? I hope. So we can just play it forward now, see where it goes. Then you have another look at as well. Another entry point here you could be using. So someone could be using a bisi to enter. Also, what time is this? 9:59. So we have macro entry there. Also macro entry on the inversion gap. You know, I'm just going to try and annotate all the, so another gap there you could be utilizing. Order block, tags it. Another inefficiency here you could be using. And then eventually when we reach the swing high, we could take one off. Another inefficiency there you could be using. Obviously, these are far into premium, but it would still work, right? And also look at what time of day this is, 10:36. So slight retracement there, taking out a short-term low. And obviously, if we form an intermediate-term low there, I'd be interested in trimming stop. I mean, I guess at this point, you could move it to break even. But let's see. So we have short-term. So there you go. Short-term swing low here. We have a swing low here that fills in inefficiency and another swing low to the right of it. So preferably, a really tight stop, you can place it there and trust that it's likely to hold that, right? And I wouldn't be too worried about it anymore. I still think that's it's not realistically, like I would just still keep it in and accept the risk. We're still looking for this anyway, so you can obviously just play it forward. So there's your, that would be your first take profit there. Second one, eventually, there's a second one. So either, you know, if you trimmed your stop there, it would have been used as a, what's it called? Stop out, but it would still be decently in profit in there. And then that would be, I don't know, how many points was that? Doesn't even matter, 62 points or so. So that'd be one example, right? So that would be inversion fair value gap entry. We could just use a standard fair value gap entry on a macro time for the next example. Let's go to Wednesday. So we can remove all this. We'll go back to the daily chart and basically just run it back. Yeah, inversion gaps are really, really nice for those kind of examples where it's like a clear, you know, London manipulation. You could use an inversion gap there, or you could be using inversion gaps at 9:30. Like right at 9:30, typically that's a really high quality day. I don't know where you can find the, oh, is this economic calendar? Nope. I don't know where you can find the economic calendar. That's the only issue that I have. So it is kind of annoying to have, I'm not gonna lie. Anyways, well, assuming we don't know the economic calendar, which should never happen, but in this case, on the daily chart, so Tuesday, obviously expanding out. Let me go to midnight really quickly. And there's your previous day high as well tagged. So that would have been your other take profit if you wanted that, right? It's obviously not needed that you capture that entire range. It's just that little chunk. So if we go back to the daily here, there's a tab of the top right calendar. Can you check if there's an economic calendar? Yeah, I looked at this and I don't see anything. I don't know if this is it or not. Obviously, I could look it up, but to be honest, I don't feel like doing that right now. So anyways, Tuesday, expanding up, taking out that short-term high and closing above it. That's going to be another bullish indication that we want to continue. You could obviously go back. I think, are we at all-time highs at this point? We might be at all-time highs at this point. So another thing, we're obviously at all-time highs currently. Don't think that just because we're at all-time highs, we're going to soup the high and then just retrace all the way back down. I do think, that being said, I do think the fact that we had that huge pump up last week, and the dollar is going to increase in value since of the new president that's going to be elected, or the president-elect, that's going to possibly pump the dollar up. It's going to have stronger price action, but then what is that going to do with inverse correlation to the indices? Most likely it's going to tank the indices. So I do think we're going to sit around all-time highs for a little bit and then sell off. But that being said, all-time highs, we're going to continue to expand up until you see some sort of reversal profile. So just don't think that because we're at all-time highs, we have to short now. It's not the case. Just keep having the bullish bias until it's blatantly obvious that we're going to reverse. Anyways, so in this case, Tuesday expanded up. We're also have our immediate rebalance here with the bullish order block. That to me is another bullish indication, right? Where there's not like we just wicked out the high and we displaced lower. Still holding this bullish order block, still holding the deficiency, trading and closing above here. This is, I would say just on the daily chart, if you were to just use the daily chart, I would still look for bullish price action. Okay. Go back to the 4 hour. Look at the 4 hour. 4 hour in here, we have a bullish order block. You could be using as a potential manipulation target. There's not really much in here. I guess there's a gap here. Looking at if London did this, then New York will likely do this. Let's look at the 1 hour. So let's go skip forward to London. Here's 2 a.m. Oops. 3 a.m. 4 a.m. Let's go to 8 o'clock again. So there's 8 o'clock. So we do manipulate into a discount PD array. We have this gap. Make a different color. As well as I think the 4 hour order block wick maybe. Yeah, the wick of the 4 hour order block. So that would be indication of, okay, we're still holding this bullish PD arrays. We're looking for an open again, low, high, close. Did London do something potentially here? So we can look for New York to expand. Obviously, if we approach 930 and it's like we saw yesterday where it just kind of continues to sell off, then we'd be looking for 930 to create the low of the day and the low of the session, right? So in here, let's go to the 15-minute chart now. And obviously you'd be using price points as well. We do have previous day high up here. Right, it's Tuesday, yep. And we could be looking for, here's 7 a.m. Let's go to 9:30 now. Well, okay, I didn't mean to do that. Anyways, gap in here. If you go back to, let's go to the 1 minute. I did not mean to do that. Anyways, 940. I don't know if we have SMT. Okay, we have SMT here. Well, even with the misclick, I hope you can see SMT between the low of session at 940 here. It is a little of a funkier profile, but you could be using different entry points. You have an inversion gap here. You could be using. This kind of looks low probability to me. I assume we have like news or something the next day. But either way, previous day high, little short-term run up at 9:30, and you can sell here. Like even if you wanted to, you have a bullish order block here. This time of day is 9:50. I'm on the 1 minute chart, right? 9:52. Is that the right time for us to expand into this high, or for us to form the high of the day? No. So like even in here, you could be using, if you're a little crazy, you could be using a discount PD rate in this case and just target that short-term high. So in this case, you could be entering in long here of this inversion gap. I prefer if we'd wait until some sort of discount PD rate is met and we can continue to expand. Let me not mess up here. Let's go to the 1 minute chart. So we take out the short-term high there. That's at 10 o'clock. That would have been reasonable for basically the entire session to be finished. And if we get another one, we get another discount entry, like here, it would still be a little sketch because that high is now formed, but you know, that could be a scalp if you wanted to. You buy it and probably take it off right there going into lunch or anything like that. But I guess we could do one more since I kind of messed up on that one. Apologies. Let's go to Thursday. Thursday here. Did you find that on my calendar? It is. Perfect. Thank you so much. Okay, so yeah, Wednesday. So Wednesday we had we had FOMC meeting minutes at 1 p.m., but no red folder news in the morning. Thursday we have, was it 8:30 news? Yeah, 8:30 news on Thursday. Okay, perfect. So May 23rd, we have 8:30 news. So we're looking for, that's actually great. So we're looking for at least some sort of high probability price action here. And we can also start to incorporate the weekly profile. So I want to make that clear. Let's go to, here's Monday in New York, or Monday. How do I turn off the session? There we go. So let's go back to the daily. Actually, let's skip it forward to 1 hour here. That's FOMC meeting minutes. So here is Thursday. Let's go to the daily chart. Let's actually go to the 4 hours. So at this point, we're still bullish on the week. We're at all-time highs, and we've had no meaningful manipulation, at least on Monday. You can see we're still holding bullish PD arrays. So at this point on Thursday, we're expected to cap off the range and potentially have a retracement just on the weekly profile. We're not going to see expansion all the way to Friday. Typically, it's going to be a potential Thursday high of week back into the range, just given the weekly profile and just given the news for the week, right? So you got to be careful here because sometimes Thursday can expand up and continue, or like for example, if 8:30 creates the high of the day, then it would be reasonable sometimes to trade back into the range. Or what you could be doing is you just continue to hold the bias, and we're going to go long back up into the highs. Okay. So for this example, we do have relatively equal lows down here that I'm keeping track of. We have the fact that we had no weekly manipulation. So we have this short-term low that we could be reaching for. And we're also going from external range. We could be looking for a potential internal range after. So if we skip forward let's go to 8 a.m. again. Is there any indication that we're likely to reverse or continue? That's going to be a little bit of a harder bias, but that's what I'd be looking for. So at this point, we're still holding this bullish PD array. What time we drop into it? During London. Okay, so that would be a potential reason why we could be looking for longs up into Thursday. We dropped into a 1 hour gap, not in discount, and then we have an expansion out of it. So depending on how we react to this inefficiency here, that'll tell us the rest we need for the session. All right, if we drop into this, we should hold it going to New York, and we'll go take that long up into whatever high that's formed. If we were to trade through this, and especially through this PD right here, this would be a SysD. That to me would indicate, okay, the Thursday high has already been put in, and we're likely to now retrace back into discount of the range, potentially reaching for these sell stops or this inefficiency and discount. Okay, so now at this point, it's not as clear to me like it was on Tuesday because of the weekly profile. Given the fact we're expanding up, we've already had a decent expansion. We've left relative equal lows behind. There's not any liquidity up here. We're already at all-time highs. And we have 8:30 news that's coming in. So all those to me indicate that it's likely to be a little bit more difficult, and we need to see what it's doing relative to price going into the rest of the session. Okay, so we have 8 o'clock in here. There's your 8:30 news. So we expand up. So now did 8:30. So in this case, if we're bullish, I'm trying to argue both sides here. Whoops. If we're bullish, did 8:30 manipulate? So did 8:30, since we have 8:30 news, did 8:30 manipulate? Meaning, did it move lower into this inefficiency? No. So now we're looking for 9:30 to manipulate. So then the next profile would be 9:30 manipulation and low of session. And then we're going to expand into London close. Right, and we're still looking at how we react to this inefficiency. So now we can go back to the 15-minute chart, and I'm looking at specifically, what does 9:30 do? Is it going to manipulate and drop into this gap and hold it? Or if it drops past it and we take out a SysD there, then to me, now we're going to, it's a reversal profile, and we're going to continue into discount PD arrays. So this larger gap here is in discount. This is a liquidity void. That's going to be a good target, right? Because we're going from external range to internal range, and we can also mark out discount of that dealing range there. So we annotate this really quickly. Line. There we go. Okay. Makes sense. And then this is sell side down here that we could be targeting as well. I know it's a lot of gaps and things like that, but let me change this color. And this, you get the idea, right? So now we're going into, so 8:30 came in, we created a potential high, and then we'll have to go to 9:30 now, and then we'll mark out 10 o'clock right there, and we'll mark out 12 o'clock right there. Okay, so now I'm going to look at the 15-minute chart. What does 9:30 do? Do we manipulate and hold this, or do we displace through it? So this is one of the days where like it's kind of dependent on what 9:30 does to have a clear bias, and you could go back in, and after the 9:30 candle prints, then you can formulate something stronger. So we're approaching 9:30, and then here at 9:30, what do we see? It displaces all the way through this inefficiency. It also, more importantly, takes out London low. If it's a classic expansion, is the London low, the low of day, supposed to be manipulated? No. What you could look for here is potentially SMT. So if there's SMT at the lows, then it'd be reasonable. But notice here, perfect example, we don't have SMT. So London low is being manipulated. It's being taken out at the 9:30 open. If it's a classic expansion like we wanted to see there, London low is not supposed to be taken out, right? We're supposed to manipulate, go back to NASDAQ. We're supposed to trade into this inefficiency and hold it and expand back up. So now I hope you can see that the if-then statement of if London did this, and now New York is supposed to do this, if it doesn't do it and we have no SMT, now you can flip bias. So this is actually a really good example of how you can flip bias in this case, of going from looking from bullish to bearish. So now, okay, we had this inefficiency that was closed through. We had the SysD that we closed through. We have a reasonable expectation that Thursday is going to be high of the week. What can we look for now? Retracement back to the range and potentially taking out sell side. So we have this inefficiency and discount. That'd be the first low-hanging fruit objective. And then we have the sell side down here, down at 18,676. Okay. And we're likely to form that new low between 10 o'clock and 12 o'clock. So now at this point in time, let's go back to the 1 minute. We understand that it's likely to form the new low after 10 a.m. So it's going to continue to expand from this point till this point to form a new low. And we have to reach a discount PD array. So this becomes, think of this as like a crosshair. So in this case, this is what I'm aiming for now. Not this entire box. I'm looking for price to hit this area because it's now a moment in time and it's a moment in price because this is in discount. It's price. So this is the Y coordinate and this is the X coordinate. So this is like a box. So if we kind of zoom out here, now we have a very clear, it's not just a random line. It's not a clear, not just a time window. It's both. And this is what you have to be focusing on, is this crosshair on price of where it's likely to reach for. This is the area it's going to shoot for. So now we could be using things like a discount PD or actually a premium array. We have this gap here. You could be using, let's go to red. You could be using that. And why is it likely to leave these open? I guess is a good example because we already had a SysD. Right? If we already had a SysD, it's more likely that we're going to leave these open above the inversion, above the breaker, because these are going to be used as breakaway gaps, right? So now we're expecting as well, this is going to be high of session. I can't mark it up, but this is going to be 9:30. We're going to displace into, what's the time of day for this session? 10:30 to 11. Right, so 9:30 high of session, 10:30 to 11 low of session. So in this case, 9:44, we trade up into it. We have 8:30 news, so preferably an entry before 10:10. You could be using the macro time, or you could be using any time between that. In this case, I'm going to see if we can trade up into slightly further. I already tagged the order block, so this would be the bearish order block that the price is reaching into. I know the colors are nasty, but in there, we traded into the inefficiency anyways. You don't even need the order block. Do them right there. So you could be looking for a shorting opportunity. If it's going to work. Maybe not. Let me go back to 1. Okay, well, it may be broken. Anyways, let's just do this. We'll do the old-fashioned way. So stop would go above here, short-term high. And the take profit would be in the moment in time and price down here. Okay? Actually, let me just refresh the page. Let me see if that works. Hopefully it doesn't break. Perfect. Okay. Hopefully that worked. So short. Nice. Stop loss, take profit. So the take profit will be down here. You could be targeting time of day. It's already approaching 10 o'clock, so it's not like we have to hold into 11. But this would be up here. So the reason it's going to be a breakaway gap is because if we have a chain, so look at this. If we have, think about it, if we have a bearish breaker, so something like this. The breaker is the second strongest PD array in the matrix. So an inefficiency that's formed on above the breaker is most likely going to be left open as a breakaway gap. We don't even want price to trade up into this range. We want to see that sys-D hold, right? So this is the sys-D right here, the breaker. So in this case, on the 15-minute chart, we have this blue line, which was that hourly and that 15-minute sys-D. So I'm not expecting that price is going to trade up into here or into here or into here. I don't think it's going to retrace that far in a premium, then move back down. This blue line, the breaker should hold price down. And since we have an inefficiency that's paired on top of it, what kind of setup is this? A unicorn setup. So this would be just a lower time frame unicorn using a 15-minute breaker instead of a 1-minute breaker. And you can see there's an order block there we're trading into in the inefficiency. Make sense? So now you're targeting here. You can skip it forward. Let me drop back to the 1-minute chart. We got short-term low there, and you can see, you can basically just mark out every single time that it forms a low. Well, there's your tag. Well, I mean, technically, notice here, is this the right time for us to form the low? It's 9:52. So, I mean, technically, you could probably find a re-entry like in here if you wanted to be greedy, or if you just say you missed that one. Okay, well, is the right price met? Well, we actually missed discount here. So we missed discount. So the price is not being met, and the time isn't being met. It's not post 10. So realistically, you actually could short here. Same exact thing, you know, place a stop, take profit. Stop loss will put like above this order block. It's going to probably a negative R, but take profit, I guess, at this low or even down here. What was this? 793. I don't even know what that is. Anyways, just for scalping purposes, you can see eventually we'll keep going. Notice this time, 9:56. Short-term low there. That could be your target. See if you what time we reach that. So waiting. Obviously, you could pyramid back into that because it's the wrong time. Still waiting. Well, you got stopped out there, unfortunately. But I'm still guaranteeing it's most likely going to reach back for that low because that low was formed right outside the window. There. And look at 10:55. So between 10:30 and 11, you get that new low formed down here. And obviously that was after you already took the first win. So even in here, you have a deep retracement, sure, back into this inversion level. But then again, that low here, that would still be the draw on liquidity until the time of day is met. So that's a short-term draw. And then you can see in here, okay, 10:30 to 11 o'clock, boom, we filled the gap. And then it's at 10:56. So that would be a reasonable time of day and price point where then that could be now the low of session. Okay. And we can probably continue lower. And we don't. So it's not random times. It's not random prices at the reasonable levels. And you can see there's an entry there. There was an entry there. We probably would have gotten stopped out or just wicked, maybe a lot of damage there. But still, if you're waiting for a premium array, then you have a 2022 model in here that you could be using too. Like notice how this is still just a fractal setup where actually even in here, since this is the draw on liquidity, you have this breaker. So this would be another kind of unicorn setup in here, right? Unicorn setup short, you can be at 10:45 and target that short-term low. And that would actually be better than this because it's actually in premium. Makes sense? So there's like two examples of basically just an expansion profile and then a reversal profile, and then how you utilize it. And I don't even know what happens the rest of the day. You probably just play it forward and see what happens. I would expect that we're going to continue lower. Okay. Let's see if we can tag the sell side. There you go. So it does take some time, but then eventually your sell side liquidity is also taken out. The relative equal lows they were targeting. And you can see, look at this 1 hour chart. Perfect. How perfect this is. Look at so it's fractal. We have this breaker in here. Extend that out. And then you have the inefficiency that I told you about earlier too, right? This one. You have this one. So this would be just a unicorn setup on the hourly chart. And then eventually down to that relative equal sell side. Do we take out weekly low? We do take out weekly low. So this would be the weekly profile here would be your consolidation reversal or like a midweek reversal on Thursday. So you'd expect that Friday is going to continue in this case, but this is common when you have 8:30 news on Thursday and that's the only one. But I hope that makes sense, right? So looking for potential bullish price action just given what London did. But then if we break through these PD arrays and it's not the right time, you can still find an entry flipping bias. So that's an example of flipping bias using time of day's entry, using time of day for exit, and just looking for a continued price action into the range, right? Yeah, this will be uploaded onto YouTube unlisted. So if you want to go back and watch it over and go through the analysis, the link will be posted in the YouTube vids chat. So you won't be able to access it otherwise if you go and you have to click on the link there. Technically you can access it if you go to the channel and you go to live stream recordings, it'll be there. It's a playlist, but it's unlisted. So you can't just look up November 9th live stream. It won't be there. So it makes sense. It'll be, yeah, once it's done rendering, which it should be in by the end of the day. I'll have it uploaded by the end of the day for sure. I have a one-on-one session that I have to upload from today as well. So that'll be first priority. And then this will be second priority. I mean, obviously you could do Friday, but we're already going for over an hour here. And I told you I wanted to be quick. So I hope that makes sense. And I hope both those were reasonable, right? It wasn't like anything crazy I was pulling out. I feel like it's pretty simple PD arrays, simple executions. There's a logic behind it all. And it's not like it's not nothing crazy difficult. You have to just see it enough. And okay, if London does this, New York will do this. If it doesn't do it, then it's likely to be either a low probability day or your bias is wrong. And using things like weekly profiles and, different entries. You could see the least important thing in all of that was the entry. Like you could use an inversion fair value gap. That was the first one we used. You could use a fair value gap. You could use a order block. You could use the breaker. Knowing where it's likely to trade into is going to be important. Like if in this case, it didn't trade into premium or it didn't trade into the breakaway gaps. That's going to be important to know. But like all those PD arrays, any of them you could use. It's just understanding where are we forming the low of this session or the high of the session? Yes. Okay, then we're going to continue to expand. That's how you can use turtle soup. Right? Because if you know, okay, at 9:30, we're going to form that low of the day and you see it, it would sweep liquidity and we start to trade out of it. That would be your turtle soup entry. Right? And that's how it works because turtle soup is really, really important with time. It's very specific on time and SMT. It's key level, key time, SMT. And that's it. Okay, and I don't know if there was a ES SMT at the highs or anything like that. Oops, I don't know why I'm short. Oh. Okay, so apparently the first time I was trying to go short, it was on ES. I don't know why that. I can't even. There we go. I closed all of them. So, okay. I don't know why that was the glitch. Anyways. So I hope that makes sense. We'll go back over to the chart. If you have any questions, we can go over those quickly. Otherwise, I'll wrap it up there and we'll get back to our Saturdays. Is your main income from trading? Yeah. I just trade and I just do this stuff. That's what I enjoy. Been trading for what year is it? 2024. 3 years? 4 years. Wait, let me see. 19, 20. 3 years total. Sorry. I had to count. So 3 years total, and then I started ICT in 2022. So like about 2 to 3 years on ICT. So if you've been studying less than that and you already have access to this, I tell you, you're going to be perfectly fine. You already have the cheat codes to it. Like, the stuff on time and the stuff on, what time frames to look for and where price is likely to expand into. You don't even, some of you don't even realize the importance of it, but it's like, if you have a great understanding of that, I'm telling you, the rest of the price action is going to be super easy to learn from. It's very, very simple. I'm glad it was useful. Thank you. I appreciate you guys joining, obviously. But that's kind of what goes through my mind when I'm thinking about things. And you could probably go back into some of the live stream recordings, and then you'll see the same kind of analysis. It's really quick, but if you go back in, if you're in the private group, if you go back in, you look at the daily bias and you read those posts, that's basically what I'm looking at. So if you read the one from Thursday, it says, I'll screenshot and put up on the screen here. This will all, it should make sense to everyone. But classic weekly expansion profile with Thursday potentially capping off the range. Still have daily buy-side liquidity pools and all-time highs we can attack. And no lower time frame chart shows any sign of reversal. Looking for a continuation at 9:30 until London close. London did manipulate below minute opening price. We had SMT, 8:30 also at SMT, and then some other data there. But that's simple bias. There's probably a lot of stuff in there, but it's not anything that's crazy out of reach for anyone. And it's just time of day that gets you there. Okay, it's just time and drawn liquidity. Entries are the least important. What is your one-on-one entail? It's really just, it's basically one of these with just me and you. So if you have any questions, psychology related, or if you want to build a model, or if you're struggling with concepts, we'll just go anything through that. It'll be like anywhere from hour to 90 minutes. And then it'll also be recorded and posted and uploaded strictly for yourself. So only you'll have access to the recording. So if you want to go back in and watch that, that would be, I hope, helpful. So if if you wanted to basically just accelerate the learning curve, that's what the private group is here for. It's not to signal bot, or it's not to give you trade entries. It's just to reduce the learning curve. And the goal is, realistically, you get in here, you learn anything that was missing in your analysis, or it boosts your learning, and then you get out. It's not like I'm not a crutch for you to lean on. The goal is to you develop the understanding and the thinking and the methodology, and then you can go in and just do it for yourself after that. And realistically, I don't expect anyone to be in here more than 6 months to a year, or even a couple of years, because at that point, beyond 3 years, you should have plenty of understanding, more than enough, that it would make sense. Daily bias. Oh, which order of your YouTube videos should I go through? Need some structure, and big thanks on the IFG. So I would say it's hard to really specify, but the main ones, the most recent ICT concept videos are going to be important. Let me actually pull it up on my monitor here. So I would say in order, the in-depth market maker model guide. So the in-depth guide for MMXMs, the New York IRL to ERL. You don't even have to watch the ATM model. I'm not going to lie. That's just there if you need it. But yeah, MMXM, then the New York IRL to ERL, and then the time guide will be important. So those three are going to be extremely important. Then there's also videos that if you're struggling on specific topics, then that's going to be there for you. Like if you're struggling with bias, then there's specific bias-based videos. The best one on bias, I think, if you're struggling with it, is going to be, see if I can find it. The backtesting bias and intraday draws. That's going to be probably one of the highest quality ones. Looking back at it, that's going to be useful. All the other videos that may be ICT concept related, you don't need. And I try and keep it very strict to like, you don't have to go back and watch. Like you don't need, I'm trying to find an example here. Oh yeah, like the backtesting New York AM and 15-minute model. Like there's some videos on there that you just don't need. And it's pretty simple. Appreciate you doing this for free. I've been trading for 4 months and just passed my first 150K account. Nice. Congrats, man. That's exactly what I do it for. To see that kind of stuff and see people improving, that's makes it all worth it. But that's great. I hope to see the payout soon. Appreciate it, Connor. Do you care what ES is drawing to in any of your NQ profile, like ESDOL? I do occasionally. Like I'll glance over at it. SMT is important. So to me, ES and NASDAQ are the same chart. Like they're basically just hand in hand. So the SMT is important. What ES is drawing to is important as well. But it's not like I'm not utilizing ES as much as the NASDAQ chart. Like you can do perfectly fine with just NASDAQ. Like I could never look at ES and I'd do perfectly fine. That being said, like why would you ever do that, right? Like you do kind of need ES for the SMT, and just seeing the SMT just to clarify everything is helpful. But if you want to glance over and look at what NASDAQ or ES is pulling to, that's nice. I just look at it for SMT. That's really it. And there's 3 different SMTs, and I'll make a video on that. But specifically, you want to find SMT for bias, you want to find SMT for the session, and you want to find SMT for entries preferably. But really, it's just these 2, bias and session. So something on the 4-hour, if you find SMT at the highs, you could use that. Obviously, pair with narrative, and then session is like what we saw on Thursday, like something like this, the SMT here, right? Yeah. So it would be, yeah, exactly. Directional momentum SMT and then bias SMT is what I call failure. All of those would be important. And I'll probably make a whole video on that after the session or the time guide part 2. Anyways, I appreciate you guys joining. I won't hold you any longer. It's already been about an hour and a half. Time flies. So I'll make sure to post this by the end of today, and you'll find the link to this in the YouTube vids chat. And if you have any questions, feel free to post that in the general, or you can shoot me a DM, and I'll try and answer those by Monday or Tuesday. So take care the rest of the day. Make sure you're journaling, and Saturday is for review. So make sure you review those journals. That's half the battle, so you don't make the same mistakes on the next week. So I'll talk to you guys soon, and take care the rest of the weekend. Peace.